Hope everyone's doing well. Welcome back to another weekly outlook. So there's actually a bit of a later upload than usual for myself. It's been busy being a labourer in my own house over the weekend, but finally back to the charts. I've already got a good idea of what we want to, sort of look for or speak about today. But before we get into that, what we want for the sort of upcoming week, let's quickly talk about the week that's just passed. Right, so we'll start out on the weekly time frame. Right, we knew we were very close to this liquidity pool. We swept the liquidity pool. We expected the move away, and we actually expected the move higher than this. Right, so cool. What do we expect from here now? Right, price on this 4-hour chart is pretty consolidated. It's not the worst, but we can see there's a clear, level of accumulation. This is quite sideways. We took that liquidity, the sell side liquidity, moved higher, bit of a retracement, another impulse move higher, and of course again move lower. So from here it looks a bit cleaner than I think it truly is. We come down to 1 hour, we see there's a lot of accumulation occurring. Accumulation, impulse move, accumulation, impulse move, accumulation, impulse, accumulation, right? Just lots of that. So this has made for very challenging conditions intraday. You can see, you guys already see I had a few things marked. So we had sell side taken, then we targeted this buy side taken. We're looking to target this sell side, but this did not get hit on the Friday, right? So cool. Get rid of these things for now. What do we want to see from here? Now, I know we have the daily fair value gap marked, which is up here, right? I will still keep this marked, but I think we can have a bit of a wider lens now, a wider focus, right, into this weekly fair value. If you mark this. Okay, cool. That should load in a second. So cool. So we know we have, some clear-cut targets to work towards. But what we need to see for us to be able to work towards these is a good kick from price. Right now, as we said, price is very accumulated. We don't like the look of this. This isn't necessarily something we want to be trading just yet. So what we would prefer to see is price, give us a clear signal to kick up. Now, the sort of, thesis that we're presenting is that, look, guys, okay, we have the previous weekly high, we have the daily fair value gap. Why are we targeting these things? What we're looking for really and truly is the reversal from there. And considering how price is set up right now and the proximity to these targets, there's a chance price just hits them without really offering us much. And that's perfectly fine, right? Because if it does that, for example, early in the week, or, it just does that in a very clear way and then starts to move away from there, then we can still trade that expansion back down, right? This could easily end up being, just one big accumulation, and then we just get a clear case of A, M, D. Doesn't mean we need to be part of that manipulation necessarily, right? Of course, if something clears off it, then you can trade towards, previous weekly high, or perhaps the daily fair value gap. If it's becoming, sort of evident that it's the draw, then why not? But if you miss out on that, and we're anticipating that the real expansion will be this way, then it's not the end of the world, right? Let's quickly have a look at our economic calendar, the upcoming week. We have a red folder on the Monday, which is retail sales. Not much on the Tuesday for the dollar, but we do have CAD CPI, which can sometimes result in a decent move on USD pairs. On the Wednesday is the biggest mover of the week. It's our FOMC. Right? I think it's one that a lot of people are waiting for, rather the market is waiting for, want to see what the Fed will do. And coming into the Thursday, lots of news, right? Specifically paying attention to the GBP, right? Again, essentially the FOMC for the pound, right? The interest rate decision, and then to end the week off, not much on the Friday either, right? So it does look like, based on this week, we could get something pretty early in the week, right? We could get something early to give us that manipulation, but in terms of that actual distribution, getting that direction again, we'd be waiting on this big news, right? All these red folders stacked in the middle of the market. I believe Wednesday and Thursday should be fireworks across the board. You guys can see there's also news for the JPY, and of course combined with the CHF as well, right? The Swiss franc. Cool. What are our bond yields doing? So about mid-month now, right? And of course, we had an impulse move. We've got a bit of a retracement. If I had to favor a side with that sort of profile, you start with a move, retracement, then I'd expect that move to continue. Otherwise, you're closing with a massive monthly wick. So now the bond yields are actually lined up pretty well, right? They're at the weekly alpha. They've approached the equilibrium of the range. So, if there was ever a time to be bearish and to expect them to drop, it would be around about now. Right, and of course, I don't think much will happen on this chart until FOMC. But as FOMC comes, I would expect, if it goes our way, then of course the bond yields will be dropping back down this way, and we'll be creating the second leg of the bearish move, expecting this, sort of larger AMD to play out. So Euro GBP, we spoke about this last week. Euro GBP is stuck in, quite a tight range. We've had, of course, after last month's monthly candle, we've really expected the move down. But Euro GBP is just one of those pairs, right? It sort of does what it wants sometimes. And what we can see here is we actually ended up getting a massive impulse move back into the range. Now we're getting somewhat of a retracement. So from the looks of it, from where we are, I would still favor a move to this daily fair value gap. I would treat this as a sort of, pivot point that we can watch for. Cool. And what we can see is actually level of accumulation building here. So we could easily see A, M, and then continue distribution this way. But the thing that I would be watching for is definitely the GBP news this week. That will be the main mover for this pair. And again, guys, if it wants to stay consolidated, even within the consolidation, because this is a daily time frame, quite zoomed out, it will still move, right? I see you got that big move up, big move down, big move up, premium to discount, premium to discount. That's all it is, right? So if we mark out the whole range, let's just take it from this low to sort of this high, right? That's your sort of current accumulation, let's say. The way you can view it is as price approaches that equilibrium at discount, what's the next higher time frame PD array where price can react? And of course, in this scenario, the one that we're watching, which happens to be it, is the daily fair value gap. Because if, again, price is consolidated and it's not going to break out of that, it's just going to react to these higher time frame PD arrays back and forth off these liquidity sweeps and, of course, make its way from target to target. Bitcoin. I actually like how the candle's starting to shape up. The monthly candle is not bad here. Dipped into that discount, so the previous monthly low, and of course trading back into that range. There's not much displacement for us to say, is the bottom in, is this it, or to make like a crazy thesis from here. Of course, displacement is the green light. It's the signal of whether are we headed into sort of manipulation or starting the distribution, right? US scenario. So just zooming out, just having a quick look. 3 months, nothing interesting really. The 1 month, of course, don't just look at our weekly. Yeah, it's not the worst. I do think there's essentially just room to go either way. I'm very, very neutral here. Next week, you could be looking at something like a previous weekly high sweep to go lower, or price just kicks up and retraces deeper back into this range. But what I do stand by is that we have this accumulation. This is the manipulation, and I'm still anticipating distribution to the buy side at some point. Whether that happens soon is hard to say. Right, but again, FOMC is coming this week is a pretty big driver, so we'll have to see what it can do for us. And lastly, the S&P, also as we expected, dipped into that discount of this higher time frame range. Quickly go take a look at that monthly. So yeah, this was the last swing point we were using, very big wicky candle, which makes for a good swing point. And of course, price has retraced back into that, has actually hit that specific wick on the monthly. And even just looking at these candles, right, just plainly looking at 1, 2, 3, these are showing a level of accumulation, right? Why? Because they're clustered, there's not much delivery, and it's come from an impulse move, which is fine. That's what you tend to see, right? When you see a big move one way, you see a big move, accumulation, then that sort of AMD retracement, the distribution continued. That's sort of what we're seeing on the DXY daily at the moment. But this is the S&P monthly. And of course, even that, what I'm talking about here is slightly clearer on the weekly, where you have, this is a clearer accumulation, and this can definitely be the manipulation leg into the discount. And of course, we are eventually looking for that distribution to the buy side. Again, guys, one more time, I know we spoke about this being a market maker buy model. All the boxes are being ticked, right? Accumulation, reaccumulations, and of course, we're anticipating the SMR, right? So again, if there was ever a time for a reversal, it would be the FOMC that's about to come, right? So that is the main mover for the dollar, and of course, the stock market and Bitcoin this week that I'll be watching very intently. And most likely we'll let it pass, and then after that I'll be creating a midweek outlook, and we can take it from there. So just in general, right, if you guys are going to entertain FOMC week, the Monday might not be too bad, right, which is tomorrow. We have some red folders for you to work with, and where price is, we have good targets to work towards on DXY, previous weekly high, the daily fair value gap, if it wants to give it to us, right? The Tuesday is not really something I would entertain. The Wednesday, of course, is a no-go, and once that is done, then of course we can be back to normal if we have a clear read on the Thursday and potentially even the Friday, right? That is how I would go about handling the weekly profile. But regardless, as always, just manage your risk, be sensible, and don't do silly things, especially not on FOMC week, because it's very easy to get burnt. But yeah, guys, that's it for the weekly outlook. As usual, any questions at all, anything I can help with, just drop me a message.